Right. Thank you so much, everyone, for joining us. I hope you're excited about Res, and we hope to see you all there. My name is Alexandra Rumbaugh. I work for the National Center for American Indian Enterprise Development as a program manager and the director of strategic partnerships. So I'm actively seeking ways for us to get involved and work together. I'd like to introduce our next panelist, that is Ann Shapiro. She is Economic Development Specialist at the U.S. Small Business Administration. Anna, if you could please come up.
All right. Good afternoon to the participants who are here. If I could just gauge within the audience, who here is an entrepreneur? All right. Perfect. Awesome. All right. So then I'll be speaking to this corner. So my name is Anna Shapiro. I am actually an outreach and marketing specialist at the Small Business Administration Portland District Office as of recently. So my role predominantly is working with our small business lenders, participating SBA lenders.
Can you hear me? All right, perfect. So today we'll talk about SBA guaranteed loan programs. I will talk briefly about conventional versus SBA loans, and then dive deeper into the SBA loan programs, benefits of SBA loan, and finally some resources for the small businesses in the room. Conventional versus SBA lending. So the conventional lending model lends itself to low-risk clients, which means that it's an established business that has stable cash flows and proven financials. This leaves many businesses struggling to secure small business financing and leaves the SBA loan program, guaranteed loan programs, as a potential solution to that issue. So we have two flagship programs, the 504 and the 7A. We also have something called the microloan program. The process with the 504 and the 7A guaranteed loan programs are very similar. And so we'll walk through that illustration, talk about those programs in detail, and then move on to the microloan program. If you as a small business are looking to secure small business financing, you would first approach your bank or non-bank lender. You would make the small business loan request, be that to either purchase a business or working capital, inventory, etc. You would come to that bank or to that lender with a request. That lender would in turn evaluate your request and determine whether or not you qualify for one of their conventional loan products, if they have a commercial line. After making the determination that you don't qualify, if you don't qualify for a conventional loan product, and that could be any number of reasons. But say, for example, I go to a bank, I want to purchase a winery, and I'm asking for $500,000 to purchase the winery up the street. My neighbor decided to sell their winery. I have my business plan, I have my projections, I have thought through the idea, talked with the owner, all my ducks in a line. I make the small business loan request, and the lender makes an evaluation and determines that although I've been volunteering at the winery for 15 years, I don't have any direct small business ownership experience. It's too risky. I don't qualify conventionally. That's an opportunity where an SBA guaranteed loan might be a good solution, depending on all the different eligibility requirements. There are a couple of important points to note in this illustration. First, SBA is not a direct lender. So if any of you had experience with the COVID EIDL product, the Economic Injury Disaster Loan, you might think that if you want to secure a small business loan, you would go to the SBA directly and ask for a loan. That only happened in lieu of the pandemic. The SBA erected this program in response to COVID to help small businesses. Under standard operating procedures, you are going to a bank, and preferably you start with your bank to determine if you qualify for one of their conventional loan products. That's another important point, because under SBA loan programs, you would only exercise that option if you don't qualify conventionally. Typically, SBA loans cost a small business more because they are more risky for the lender. So that's the second important point to note from that illustration. And the third point is that the lender will choose whether or not they exercise the SBA Guaranteed Loan Program. The lenders who are participating in the SBA Guaranteed Loan Program have a playbook, and then based on their own internal credit policies, they determine what they're comfortable doing. So with that, we'll move into a little bit more information about 504 and 7A. Like I said, those are the two flagship programs, and then talk about the microloan program. You'll notice in this illustration we have a subcategory of community advantage loans and international trade loans under the 7A program. Your next speaker, James Newton, will be talking about the international trade loans in depth. So reserve your anticipation and questions to that presentation. So we talked about the SBA guarantee loan process, again, highlighting that it's the business and the lender, and SBA only fits into the equation if, for whatever reason, I buy the business with an SBA guaranteed loan, the business fails, I default on my loan, the SBA will come in and pay a guarantee portion to the lender, anywhere between 75% to 85% of the loan proceeds. So that's the only time that the SBA would interact with the lender and not with the business. Yes? So the reason I say number one first is because you need to determine whether or not you qualify conventionally. You have to make that determination, and a lender will not offer an SBA loan until they determine that you don't qualify for one of their conventional loans. That's SBA rules.
They choose not to go down the SBA guarantee program.
They can, yes. So the other point, right, so first you want to, by default, determine whether you qualify conventionally. Now, I said best to start with your bank. If your bank is not an SBA participating lender, then that's where you stop at that bank. We have a list of participating SBA lenders at the district office locally. So we can send you to the participating SBA lenders, and they would have that same conversation. You would need to tell them that you spoke with your bank about a conventional loan, you didn't qualify conventionally, I understand that you have an SBA guaranteed loan program here, is that something that we can talk about? Does that answer the question? Okay. So, right, if you approach a lender and you're rejected for a conventional small business loan, chances are a different bank will also reject you for a similar reason. Like I said, credit policies differ from bank to bank, but if it's an obvious reason why, for example, you want to purchase a business and you don't have the management experience, or you've never run a business, that's gonna be a red flag at any bank. They don't really have an appetite for that. So that's why you wouldn't qualify conventionally. And there could be, like I said, any number of reasons why you wouldn't qualify for a conventional loan. So this just illustrates the SBA loan program, where it falls into the landscape of small business lending. The most viable being experienced management, established business, you're in a high growth market, you have great cash flow. That makes sense conventionally. If you are starting a business and you have no management experience, no potential chance for repayment, it's an impractical business idea, an SBA guaranteed loan program is not going to be a solution for you. It won't be, a loan period will not be a solution for you. There are organizations out there to get the business to a place where they are bankable. So within the SBA, we work with a network of resource partners, the Small Business Development Center, SCORE, the Women's Business Center, that provide small business counseling and advising. And within those organizations, they have both small business advisors, they have programs and workshops, and they have teams that, for example, the Small Business Development Center has something called the Capital Access Team that focus exclusively on small business financing opportunities. So while I can only speak to the SBA loan programs, that group can speak to other programs out there. There could be local and state revolving loan funds that we don't know about. They might have better relationship with some of the banks and can speak to different loan products that are available through the banks, et cetera. So the point there is there are a number of resources out there, SBA and non-SBA resources, that can assist a business to get to a point where you are bankable and you are ready to have that discussion with a lender on small business financing. So I mentioned two programs, 7A and 504. The 7A program is like an all-purpose flower. It provides funds for a variety of small business uses. They're federally guaranteed loans up to $5 million, offer competitive loan terms, and there are both term loans and revolving line of credit. Uses of 7A loans are for working capital, inventory, lines of credit, term loans for equipment, tenant improvements on new or existing facilities, term loans for debt refinance and change of ownership, business acquisitions. The slide deck is a little different than what I'm used to due to the technical issues we experienced up front. So work with me if I'm navigating the slides along with you. I want to know, it's not in these slides, but as far as eligibility is concerned, to be eligible for a small SBA small business loan, at the very least, the high-level eligibility requirements are a for-profit business, so we don't offer loans to nonprofits. You have to be small by SBA standards, and there's a size standard table that's available online to make that determination, but really, most businesses would qualify as a small business under that size determination with the SBA. Again, that is out there on the website and you can check that. But I promise you, chances are you qualify as a small business. And then it needs to be, like I said, a for-profit business, and businesses that are not eligible are businesses that are speculative in nature, so investment properties, residential properties, if you're involved with gambling. Again, there's a list that you can find online, but most of the businesses that are ineligible for SBA loans, it's a very logical reason why they would be ineligible. So under the 7A program, I mentioned the two other programs, the international trade loans that Jim will talk about later in the day. And then there's the Community Advantage pilot. This program is a little different in that rather than working with small business lenders, you're working with mission-based lenders. So rather than bank or non-bank lenders, you're working with these mission-based lenders who are particularly focused on the underserved markets, and they actually receive loan guarantees up to 90% versus the 75 to 85% under the standard 7A program. So the Community Advantage lenders, we also, like the 7A lenders that I mentioned, we have a list of participating Community Advantage lenders. The credit requirements are going to be more flexible under Community Advantage than they are under 7A. But what's important to note, like 7A standard, Community Advantage, the underwriting process is a rigorous underwriting process. It would be just as rigorous, if not more rigorous, than what you would experience going for conventional financing, because this is a more risky loan. There's more on the line. These are taxpayer funds, and the lender and the SBA wants to ensure that the funds are used appropriately. Veteran Advantage. This is, so with SBA loans, there are associated upfront guarantee fees that you're paying because, like I said, it is a more risky loan. In addition to the upfront guarantee fee, there are other closing fees that the lender will also include in the package. The Veteran Advantage is a fee waiver in the event that there is a veteran small business owner that applies for an SBA guaranteed loan. but really it's not a special loan that's there for veteran-owned small businesses. It's exactly what I just said. It's a fee waiver on the 7A loan. So on the subject of upfront guarantee fees, for fiscal year 2023, the upfront guarantee fees for loans $500,000 and less is zero, which is huge. For those of you who are not familiar with the SBA loan program, like I mentioned, there are upfront guarantee fees that are traditionally associated with SBA loans. In this fiscal year, the SBA decided to waive those fees for loans up to $500,000 to help businesses who are looking to secure the additional small business financing. And then you can see here, the fee structure continues. It's not necessarily important to understand now. This is everything that a lender would walk and talk you through in the event that you go through an application. This is more for your situational awareness of what to anticipate when securing an SBA guaranteed loan. So I wanted to demonstrate what this fee waiver in fiscal year 2023 actually looks like, because without seeing the numbers, it's kind of hard to understand how important this is. So when there was no fee relief for a $500,000 loan, you would be looking at an upfront guarantee fee of $11,250. There was some fee relief in 2022, you see here, and then in 2023, they erased the upfront guarantee fee for the guarantee portion of the loan to zero for loans up to $500,000. So that's effectively a little over $11,000 in savings for a small business looking to secure financing. So that was 7A. 7A, all-purpose loan. 504 is set almost exclusively for commercial real estate and heavy machinery and equipment. You can secure a 7A loan for commercial real estate and heavy machinery and equipment, but there are some advantages to the 504 versus the 7A, and the mechanics of the loan work differently under both programs. At the end of a 7A transaction, you come out with one loan. At the end of a 504 transaction, you come out with two loans. 504 offers lower down payments, fixed rates, longer amortization schedules. You're able to retain the working capital because of the lower down payment requirement, and it doesn't tie up other business assets. So the 504 loan uses, again, a little more detail. You can use it to buy or construct owner-occupied building. It's important to note that you do have to have at least 51% occupancy for an existing building. And if it's a new construction, then you need to have 60% occupancy and 80% within 3 to 10 years. And then also, as far as loan uses are concerned, buying machinery and equipment, you can use it to buy both machinery and equipment, and it includes costs associated with purchase, transportation, dismantling, and installation. And it must have a useful life of 10 years, at least 10 years. So with the 504 loan program, this is the loan structure. You will be expected to provide at least 10% equity injection, and that's at least, but it can go up to 20% depending on the use of proceeds. 40% is provided by a certified development company who packages this loan and then services the loan after it's approved by the SBA. And 50% is provided by a third-party lender, which would be, as far as the process is concerned, it would be you going to a Wells Fargo, wanting to secure a small business loan. They determine you don't qualify conventionally. They understand you want to purchase commercial real estate. They are a participating SBA lender. And then they can assess whether or not an SBA 7A or an SBA 504 makes sense for you. If they determine that it's a 504, then they will reach out to the certified development company to orchestrate the deal. It is possible for the business to go directly to the certified development company if your bank is a non-participating lender, SBA lender, and tell them about your loan request, and they in turn can then suggest a third-party lender that they might be working with frequently on other transactions. That is another way of going about it. But typically, it's the former, where you approach the bank determines conventional, non-conventional, SBA, okay, SBA 7A or SBA 504. And then it is not a CDIF. It might be a CDIF, but it's different from a CDIF. It's a particular organization they offer other loans as well, but they are administrating the 504 program. Yes.
Don't sell land.
Right.
Trusted
Yes.
land. So will you finance a building on a
reservation? So that point, I don't know for sure. And I was thinking about that as the other presenters were speaking. I don't know for sure, and that's something that we would need to circle back on. I can leave my contact information and provide an answer. I don't want to lead you or mislead you. I don't know, Jim, if you know offhand. You don't. Yeah, so that's something that we would need to check.
I kind of know a little bit about it.
Oh.
I've been trying to work on it. When you read your SOPs for the 7A and 504, there's some really stringent conditions for trust land. You have to get a complete waiver of sovereign immunity from the tribe. You can do that for any activity on the reservation, and the legal process has to be federal courts. So as opposed to tribal court or state court. So those are two things. And then the other issues are appraisals. You know, it's hard to get true appraisals for trust land. And so, but my best information is that there's probably a little activity, and I don't want to, you know.
Yeah, no, this is great.
Little,
this is very relevant.
Little to none. If you look at the portfolio at SBA, there's probably very little of 504 and 7A on trust lands. Most of it is for tribal members and tribal businesses with off-reservation locations. So I've been trying to get the administrator and Jackson Brossi to revisit the SOPs to make it user-friendly. Almost maybe, I suggested maybe you adopt the BIA program, the loan program. And so it's up to the banks to figure out how to structure a loan. So that's the latest that I have. And so I've been working with Assistant Administrator Jackson Brossi on this. But,
excellent.
They tell me that they're going to have some consultation soon to look at what are some of the challenges and why there's limited activity in Indian country. So for Navajo, but effectively, no one's really doing anything on trust lands anyway. Mm-hmm. When you look at the activity out there, especially for the small business side.
Is it because of the restrictions?
It's because the restrictions, and so a real banker will only do lending on trust lands if there's a loan guarantee. Mm. Yeah, you know, so, but I'll stop there. But go ahead.
Yeah, now we're at 6.25%.
No, but that was the commercial rate then. I went through a CDIF that would support us with a loan guarantee. My rate was at that time was 8.5%.
Oh my gosh!
So if you take today's commercial rate, add another 5% to it, the cost of this, issue is very expensive for the small businesses. So it's really, if you guys could do something, it'd be a tremendous help.
Mm. Well, I certainly appreciate that feedback, and yeah, it's something that we'll have to go back and look into a little bit deeper. So this is the upfront guarantee fees on the 504. Like I said, when it becomes relevant, the fee structure is broken down by the lender when you have that discussion on the 504 loan product. So we talked 7A, we talked 504, and then we have the microloan program. Of the three programs, the microloan program is the most flexible when it comes to credit requirements. There's still an underwriting process, and it's still approached as if underwriting a conventional small business loan for the reason that we talked about, that these are government funds and they want to ensure that you are using them judiciously. So with the microloan program, unlike the 7A and the 504, you're working with nonprofit intermediaries who are generally mission-based lenders on these microloans. They are capped at $50,000. The interest rates are negotiated by the lender, and there are maximums that the SBA puts in place, but ultimately the lender decides based on your credit situation what type of loan. The more risky the situation, the higher the interest rates, typically. So loan funds can be used with working capital, inventory, supplies, equipment, and furniture. And like I said, of the 3 programs, this has the most flexible credit requirements. We have 4 participating local microlenders in Oregon: Mercy Corps Northwest, Micro Enterprise Services of Oregon, Oregon Association of Minority Entrepreneurs, and most recently, Business Impact Northwest. SBA also has a surety bond guarantee program. Like the SBA loan program, the surety bond guarantee program is administered by agents that work with surety companies. And if you don't qualify for conventional bonding, then the SBA will come in and guarantee the bond for businesses that might otherwise not be able to secure bonding requirements for construction projects, etc. Here are some benefits of the SBA guaranteed bonds. And this program, admittedly, is not one of my stronger suits. So if there are businesses that are interested in bonding, that's certainly a follow-up to our office, and we can get you the information that you need on the bonding, the participating sureties who work within our program, and start those discussions with them. So the application process is similar as the small business is seeking bonding from an SBA authorized agent. The agent seeks bond approval from the SBA partner surety company. That agent submits the application to the SBA. Presuming everything works out, SBA approves, and then the agent issues the bond to the small business. Just a reminder for federal contracts, there were discussions about contracts here at Nike. There are also federal contracting opportunities I think you all talked about earlier in the day. So if you want to sell your good or service to the federal government, there are programs for that, and there are native set-aside programs as well. And that's something that is covered by my colleague Joe Smitak at the SBA. So if government contracts are an interest, we can certainly talk about that in the Q&A, and I'll address what I can. And if there is a requirement for more in-depth information, we can certainly connect you with Joe on that point. But just a reminder of the type of bonding requirements associated with federal contracts. Sureties? Yes, we do online. So if you go onto sba.gov and just type into the search bonding, it'll take you to a page where you can input your zip code, and then based on your zip code, it'll pull up the participating sureties. Now, I believe there's one surety company that is local to Oregon, and the rest are nationwide sureties, but you're welcome to call any one of them and ask about the surety bond guarantee. Yes.
The surety bond program is another area that we're looking for. And I'm chairman of the board for this organization, but I also support the Navajo, or the Net Chamber of Commerce out in Arizona for Navajo. And so we had a couple folks that joined. We have a Monday call, and they talked about performance bonding. And pretty much the representative said it's a challenge to do performance bonding on Indian lands because of the reasons that I mentioned earlier. Mm-hmm. You know, the big reason is that a lot of these surety companies do not want to deal with tribal law and tribal courts.
Yeah, and like you alluded to, that is probably similar to small business lenders as well.
So the same underwriting principles that go into doing a loan are also pertinent to performance bonding. And so, but for whatever reason, that market is zero, if you will, on trust lands.
Yeah, and I think that discussion is happening internally within the agency. That's a discussion that's happening at headquarters.
Trying to raise that, yeah.
Yeah,
we raised it because the administrator came out about 2 months ago and said, we're going to be pushing these surety bonds. And so I called and said, well, don't forget Indian country.
Yeah.
And so I'm glad that there's some movement or discussion taking place, because there's a lot of construction in Indian country, especially with ARPA and the IRA. And so without offering our native small businesses access to performance bond, they're going to be shut out.
Mm-hmm. Yeah.
I'm here because we have a construction company. We have the same issues. We can get bonding on the reservation. We don't have to for our BIA contracts, but for others, we have to put not a strong balance sheet, just in be full disclosure. We have to put up $500,000 to get that million.
In working capital.
Right.
Mm-hmm.
So the cost is 5 times the cost, and mainly balance sheet, but also the risk associated with being on trusted land. So it's
Yeah. All right. Well, as far as benefits, clearly there's opportunity for native lands as far as the benefit to SBA lending, as was discussed here. And that's something, certainly, like I mentioned, is being discussed beyond my pay grade. But typically, the benefits of SBA lending means that it's reasonably termed loans for businesses that might not otherwise qualify for small business financing, smaller equity requirements. And going back to that, I don't recall that I mentioned, we did talk about the minimum equity requirement of 10% for 504. That expectation would be the same for 7A. Although it's not outlined that it's a minimum of 10%, it's going to be expected that at least 10% equity injection is provided on a small business, SBA small business guaranteed loan. And then longer repayment terms means lower monthly payments and increased cash flows to the business. So a benefit to the borrower is benefit to the community by promoting economic growth, generating tax revenue, creating jobs, and of course, encouraging innovation. So, yes, please.
One of the challenges in Indian country is that a lot of reservations do not have taxes. And so, one of the things that I hear is that, these programs are going to create tax revenues, but that's tax revenues to the state and maybe the feds. And so if you look at the tribal organizations, there's probably about a dozen out there of the 574 tribes that actually have tax programs.
Mm-hmm.
But generally in Indian country, a tribal person is exempt, does not have to pay a state income tax nor sales tax. Generally, if you're tribal owned and you do business on your reservation. So that the tax revenue benefit may not be beneficial to Indian country. And so it's a big miss. And then also there's actually no property taxes in Indian country at all. And so when we talk about mainstream, benefits, we don't see that in Indian country. And so I'm just pointing that out, for your benefit. And so, how do you fix that? I know, like Navajo, we do have a sales tax and a few other things, but it doesn't generate the revenue like you see in neighboring cities, towns, and state. And so that's where, in many cases, tribes generate the revenue from tribal enterprises. Unfortunately, or maybe beneficially, a lot of tribal enterprises compete with private-owned tribal businesses. And it's a problem out there. Like, for example, a tribal-owned coffee shop. A tribal member wants to create a coffee shop. Well, the tribes say, wait a minute, you're going to compete against us, so we're not going to approve you, private tribal member entrepreneur. So there's these challenges that continue to play out in Indian country. So that, if I'm going to do a PhD paper, I probably would look into that. Why do we see limited economic development in Indian country? I think it's because of some of those issues that go on.
So that is certain. It sounds like a policy issue rather than
it's a policy issue, but it gets back to kind of the crux of Indian country and its trust land. And how can we maybe create some other issues to deal with it? And so trust land you can't collateralize. Trust land comes with tribal courts. I used to work at Chase Bank, in the day, and these big guys, you don't see the big guys doing any activity in Indian country for the reason of the unknown. They just don't know what's going to happen in a tribal legal setting. So you'll see smaller banks dabbling in Indian country, but the big guys, the top guys, they stay away from that. So the question is why? So, I'll point fingers. I see Wells Fargo, I see Bank of America, I see Chase Bank. They have no activity in Indian country when it comes to small business loans. So I'm just pointing that out. So we got to get together and go to Park Avenue, New York, and say, Jamie Dimon, open up your door, or Charlie Scharf at Wells Fargo. Well, I don't mean to take it, but some of the smaller banks, like Native American Bank, some of the Indian-owned banks, their problem is that their pipeline is predicated on how much money the BIA loan guarantee program gets. And I think this last year they ran out of money by June. So their allocation is roughly $150 million a year. And so I'm just throwing it out to you for as you talk to your Congress folks, or we have to figure out how to, in this case, ease up the SBA loan restrictions, get more money to BIA. I'm still trying to get some more clarity as to what USDA does, but as a former banker, and the reason for that is that the FDIC and the controller, you have to demonstrate proper collateral. And so since you can't collateralize any real property in Indian country, the alternative is a loan guarantee. So that's the only way you can effectuate and close a loan. So, hey, food for thought for everybody here. But thank you.
One more question over here, I think.
Yep.
Thank you. My name is James, and I just like to say too, the trust, land into trust is a bigger issue within Indian country, and Indian country to me includes Alaska because we have 229 federally recognized tribes, 13 regional corporations and village corporations and such that represent us. We have fee simple title to our lands, 44 million acres at the time of ANCSA, and that puts us in an even bigger jeopardy. We may qualify for loans, but our lands and our waters are in jeopardy by corporations taking them. And I just that's food for thought, but a lot of our folks in Alaska are fighting to get our lands in trust specifically so that we can hold on to them and that our future generations will have them. So, Gunuk thank you.
Yeah, and I mean, these clearly are all very important points that have been raised. I'm not versed in these subjects, and so I don't want to pretend that I am. I will say that our district office, the deputy district director at the SBA Portland, Oregon district office has taken the cause on himself. And so I certainly would like to get your information so that the both of you can speak more on that issue, because he is much more informed on Native issues than I am, admittedly. So this is a demonstration of the lending activity in Oregon. Lender Match is one of the ways that you can go ahead and find an SBA participating lender. This is an online platform through SBA.gov. So you asked earlier, if my bank isn't participating, how do I identify an SBA lender? This is one of the ways that you can do that. By inputting your small business loan request, that information is sent out to a network of lenders who chose to participate in this program. So it's not all inclusive. There are lenders that don't participate in Lender Match, but many do. And this program is going through a major rehaul. So I would anticipate seeing a lot of changes to Lender Match in the upcoming months. It's an agency focus to get this to a point where it's more workable both for the borrowers and for the lenders, and to properly connect businesses with an appropriate lender versus just throwing the business request out into a net of lending institutions. So this is one way of going about it. Another way, like I mentioned, is reaching out to our office directly and asking for that list of participating SBA lenders, and we can share that information with you, and you can reach out to these lenders. Some lenders require depository relationships, so they will require that you have your deposits at that bank if you secure a small business loan through them. Other banks don't. And so it really just depends on the bank. And so without actually talking and inquiring about that process, I can't say brushstroke comments on whether or not that's going to be required. That network of resource partners that I alluded to at the onset of the presentation, the Small Business Development Center, SCORE, and the Women's Business Center, they all provide small business counseling and advising for businesses that are still thinking about an idea, for established businesses, for businesses that are looking to grow. I would say this is a great resource, if for nothing else than a sounding board on your idea. And but there are a number of benefits to reaching out to them as far as getting the counseling that you need for your small business. Yes. Yeah. Yeah. Right. Yes. Which are going to be critically important anytime you make a small business loan request. The lenders will want to see that you thought through all of the information and how that money, more importantly, how that money is going to be used and how that money is going to impact the business. And that's something that the resource partner, as Jim mentioned, can work with you to establish and determine. So our district office is located at 620 Southwest Main Street. You are welcome to call our office. I probably should have addressed this at the onset, but we ourselves are not direct service providers. Everybody in the office holds a position that works with one of our partners. So I mentioned I work with our lenders. We have somebody that works with the resource partners. Jim works on our international trade program. Joe works with government contracting. So we will typically refer businesses out to the network of partners. We ourselves provide compliance and oversight to the organizations who are participating lenders, but you won't necessarily get a direct service from the SBA other than a referral to one of our partners. Unless we're talking about government contracting and the A-to-A program, then that is a direct service that's provided by Joe Smitek, who I mentioned in my presentation. So with that, that ends my presentation. I'm open to any other additional questions. Running just a little over time, but it was an interactive discussion. So unless there are any other questions, yes. Hi. Can you have multiple 7A? Yes, you can, as long as it doesn't exceed the limit of 5 million in aggregate. Office of Indian Affairs.
Are you working with the Office of American Affairs so that there's coordinations and lessons learned around the country through all the district offices? Because it's been my experience, one office, has a lot of information, lessons learned in dealing with tribes, and down the street, some other district offices just don't. And so just curious as to how that networking is taking place with.
Yeah, like I mentioned, there is extensive networking happening with the district deputy director at the SBA and the native agencies in Oregon.
Okay.
The extent of that collaboration and the agencies and organizations that are involved in those conversations, I just don't remember off the top of my head, off the top of my mind. But it's something, like I said, if I can get your information, I'd be happy to connect.
Well, I'm actually putting in a plug for Jackson Brossi, who's the assistant administrator for Office of Native American Affairs, SBA. He's up in D.C. And so I know he's reaching out and trying to build his network within SBA so that, we have he has a central repository so that we can, get through these hurdles in further improvement in any country relative to business development. So thank you.
Yeah.
I know we're coming to the end here. My name is Amber Faced. I work with the Oregon Native American Chamber. And actually, I was just in Washington State with the SBA, Sam Goldstein in particular,
Yes.
who was at a Native listening session that was held at the Emerald Queen in Tacoma. So the Portland office is making efforts to reach tribal communities in Oregon specifically. And then I think partnering with ONAC, I was a little disappointed we weren't on the resource list.
So there's a
strategic
national-
alliance memorandum that is
alliances
pending
and national
currently.
contracts
So,
that dictate.
yeah, I
who's
just
on
wanted
that
to say
list.
that, you know, the SBA here in Portland is reaching out to tribal communities throughout the state, but more importantly, they're showing up regionally as well.
And Amber's going to be speaking this afternoon and at the roundtables, and she has some really exciting news to share. I'm so happy for her and them.
Awesome. Well, if there are no more questions,
One
then
more. Do you have a
I'll-
question? Did you have a question? Oh, okay.
Should we invite Jim?
Yeah. Yep. Aaron's going to introduce Jim.